I really would like to make a real general introduction and understand a bit how did you find yourself in the blockchain world and what really intrigued you at the beginning to be part of this.
Yeah, it's a very unusual story. When I was younger, I read a novel called The Crying of Lot 49, and it's about a bunch of people who hate the government and start an alternative postal service. And this thing is successful and it operates off the grid in parallel with the real post office. And I began to read about Bitcoin sometime around 2011, 2012, and I read that, in fact, here's an alternative payment system where people are dropping out of the mainstream financial system, and there are enough people and enough businesses that it works just like the post office in this novel. And so it was really a work of literature that made me see parallels to what these people were trying to do. And I think underlying both the novel and what was happening in real life was a real libertarian impulse that politically people wanted, in the case of Bitcoin, to have a currency that was not controlled by any government, that was simply controlled by market forces, and would have some type of commitment not to inflate the money supply and to let mathematical rules instead of the judgment of central bankers determine how the currency grew and evolved. And the fact that they were able to make this work and implement ideas that economists had really going way back for more than 100 years, I found it remarkable. So I was just very curious and then increasingly impressed by the ability of this thing to attract an audience and to establish itself in the real economy. And then, events kind of took over from there when governments began to worry about this and get interested. I realized that this was moving into the mainstream and was really a new alternative to the payment systems that we've had for hundreds, thousands of years.
So indeed, we are looking now. There is a huge buzz around Bitcoin, but especially currently around blockchain technology in general.
Right.
And what we see and what we experience also, it's that really there is quite some unclarity about the topic, and many people are claiming to know a lot about that's gonna change the way we perceive financial institutions. So let's try to put a bit of clarity in that. How would you define blockchain, and actually, why do you think people are so crazy about that? What's the real, if there is a hype about that or not?
Well, if you study Bitcoin closely, you realize that one of the important innovations is this blockchain, which is the way that the records of the spending of Bitcoins are kept. And it turns out that the blockchain goes back about 25 years. It was developed in the early 1990s by data scientists at Bell Labs.
Yeah.
And what they were interested in was authenticating the ownership of intellectual property, of musical records and things that were at that point being made digitally instead of in physical form. And Bitcoin itself has a number of constraints that seem to limit really how much it could ever grow. But the technology behind it can be adapted to conveying any number of different assets. So everything from real estate titles to shares of stock, derivative securities. And what you have with the blockchain is a very different way of keeping track of financial data. And I look at it as being comparable in importance to double entry bookkeeping. That you have an idea with double entry bookkeeping that comes in the 1500s, and once businesses begin to operate that way, it's a huge change in terms of the integrity of the data and the ability of people to make promises and rely on them and validate that things have happened or have not happened. And with a blockchain, you have a vast improvement. Double entry bookkeeping has worked pretty well for 500 or 600 years, but this is a big step forward. And in the end, double entry bookkeeping requires auditors and other people to check on the work, to validate that people are telling the truth. But with a blockchain, this is done automatically through cryptography, and in a way that you can't go back and erase things in the ledger and alter them the way that you really can with corporate accounts today. So The Economist magazine at one point called the blockchain a trust machine, that it allows you to trust the behavior of people in a financial or an economic situation. And I view it as a huge breakthrough. I think, it's just a very important innovation in the way, not just for currencies, but the way that all businesses can conduct their work. And I think what you're seeing now is the beginning of a migration so that maybe 10 years from now, all financial records in the world will be kept on blockchains. And right now it's chaos because people are realizing what the opportunity is. They see that the regulations now in place are not completely, really don't anticipate blockchains at all, so they have to be reconsidered. But they also see that there is so much to be gained by doing this that they're looking for ways to make it happen. So I think it's going to be a particularly difficult period in the markets for the next decade or so. Jobs will change very quickly. Regulators are going to have to get up to speed and adapt. But if you understand where you're trying to get to, and you see the possibilities of going from where we are now to a market where people have much more integrity and reliance on financial records, you can't afford not to do this as a society, really.
So this will lead me to my next question. It's indeed we see that lots of incumbent financial institutions are now really diving into blockchain. They are open blockchain department. They build up blockchain team. They're really focusing on that. Do you think this is the right strategy in order not to get disrupted somehow, or what would you suggest them?
I think it's very clear what their motivation is, which is fear.
Yeah, definitely.
What this technology really does is make many of them unnecessary. And what is really going on in industry is that a lot of the established firms are trying to do the bare minimum to do enough of this to maybe gain some efficiencies, but preserve the barriers to entry that they have in industry now. And they seem to be working very closely with regulators to deny entry to the upstart new companies who wish to disrupt them.
Yeah.
And I think that's going to be the dynamic for the foreseeable future, is that they're going to say this is dangerous technology and only we can be trusted. So if I were JP Morgan or ABN AMRO or one of the big banks, I think I'd be doing the same thing. They're at a huge disadvantage in this because they have to comply with the existing regulations. If I'm a startup firm, I can just say I'm in the cloud, nobody can regulate me. And to a certain extent this is true, but if you're Citibank, you really can't afford to take that position because the government has so many other levers against your businesses. It's a very difficult problem. I mean, I feel some sympathy for the leadership of these organizations. But on the other hand, the whole reason this technology arrived is because people were so frustrated with the banking and payment system that we have that they were casting about for radically different solutions. And I think if the industry over a long period of time had behaved better, you wouldn't have had people motivated to look for alternatives like this. So in the long run, I think it's going to be too little, too late. But they're going to fight very hard to defend the positions they have.
Maybe a good solution would be cooperate with the startups and the fintechs.
Yeah, some of them will try to buy the capability. That's a very common strategy. I think the problem of regulation is going to be very, very difficult. That if you run a big firm today and you're issuing securities and you're taking consumer deposits, you're going to be complying with the securities laws and the banking laws. But if you start a completely new organization like Coinbase, you can really operate something that looks a lot like a bank, but is different enough that it's not regulated like a bank.
Yeah, definitely.
And this gives you big advantages, not just in cost, but in flexibility. So I think you're going to see securities being issued in very different forms by totally new companies who take the position that the SEC in the United States or the regulators in other countries don't really have jurisdiction over them. And so they don't have to comply with the disclosure and pay the fees. And it's not clear there's a whole lot the government can do about this. Enforcement against these people is very difficult because they're decentralized organizations with nobody in charge, and they're not physically located anywhere.
So how the government is actually how the regulators are behaving? What do you see around in the US or also European setting of it.
One thing you see very predictably is that all the regulators want to own this. And so in the
Makes
U.S., the commodities regulator says this is a commodity. And the securities regulator says it's the security, it's ours. And the banking regulator says this is money, so we're going to regulate it. And there's a lot of confusion. I think there's a real need for national governments to stipulate what type of asset these cryptocurrencies are. And I think really they're a new asset. They're not any of the things that we're familiar with before. And they need to learn about them and figure out what problems they solve that we don't need to worry so much about anymore, but what are the new problems, which are potentially very serious, and how would we find a way to protect consumers and come up with regulations that are actually enforceable. It's a huge challenge for governments.
Yeah.
Now, the approach many people are taking is the so-called sandbox.
Yeah.
Where
we issue one also in the Netherlands.
Yeah, no, the Dutch have a sandbox. There are sandboxes all over the place.
Yeah.
And the logic of the sandbox is that you can do whatever you want as long as you stay in the sandbox, but don't try to get out and play outside. I think the sandbox strategy is just a way to buy time and try to keep this thing under control before they can figure out what to do about it. Efforts are underway by some multinational groups to try to write international standards. And I think the mistake a lot of them are making is to try to fit this into the frameworks that we already have. Organizations like the Bank for International Settlements are thinking that they have a role to play, and maybe they do. But this is not a payment system like the SWIFT network or other thing. It is so different, and it relies on verifying transactions in a probabilistic way, which is a totally different approach. And the ability to intervene and enforce remedies is so limited with many of these assets that I'm not sure that you even can regulate them, even if you wish to. That was the intent of the people who designed them, is to rely really on the behavior and the reputation of the people who contract, as opposed to some third-party authority who would cast a shadow over the whole market.
And how would you, so blockchain everywhere is considered almost a heavily solution, let's say. But of course, we know nothing is perfect in this world. So how would you summarize a bit the limitation that the technology can have? And also, if it has any limitation, which can be, in your opinion, the time frame these problems can be solved?
We're only beginning to see what the problems are. And one of the things that I think justifiably people worry about are the use of smart contracts, where certain blockchains, such as the Ethereum blockchain, have the capability to have self-executing contracts in the future. And so I might borrow money from you, and we could write a contract that says if I don't pay you back in time, you get the title to my car. And the car drives itself to your house, that kind of a thing. So it's possible that you could have smart contracts that get out of control. Maybe they enforce themselves under conditions that neither one of us would have wished, or maybe they start to make calls on other smart contracts in some type of recursive loop that would cause some vortex to open up and suck all the assets in the market into it. We don't know, but we do know that in computer programming there are things like infinite loops that you can't get out of. And you worry about smart contracts having either errors in programming or a logic in design that can cause some type of financial catastrophe. I think this is now well understood, but a smart contract, by definition, is supposed to be something that can't be stopped.
Yeah.
And so you worry about these scenarios where the machines take over and ruin the world, but it's not something to be taken lightly. You need to have some opportunity for human intervention and to agree on who it would be, who would have the authority and under what conditions and so forth. So that's one big issue, is the ability of these things to become so autonomous that they start to cause a lot of harm. Like those movies about robots that just they get a little bit of artificial intelligence, but not as much as they really need, and they start to do lots of stupid things. There's a very simple problem with blockchains, is that sometimes people make mistakes. What if I put an extra 0 and send you not 1 Bitcoin, but 10? All I can really do is ask for you to send the other 9 back and hope that you'll cooperate, and maybe you will, but we have procedures in place in the stock markets now. These mistakes occur from time to
This could
time.
be a problem of every technology.
Yeah, and so, this is particularly difficult because it's irreversible, that you can't erase the old transactions, you just have to offset them with future transactions. But it's hard to compel the counterparty. If I sent you 1,000 Bitcoins, you might really think twice. I'd be really rich if I don't give them back. It's an area where the responsibility of the two counterparties is much more important. The financial system we have now has a lot of consumer protection built into it, so that if things go wrong, usually some government agency will refund your money and honor it. And there's none of that with blockchains. And so you really have to get used to a higher degree of responsibility on you. So if you want to deposit Bitcoins in a digital wallet company, it's really up to you to figure out. There is no bank examiner. There's no government standard that they have to meet. It's do-it-yourself insurance. Now, I'm not sure that this is particularly efficient, but the government probably has comparative advantages in bank examination and so forth. So, we could go on, but I think these are really very different challenges that are introduced by a technology, and both the consumers and governments have to be aware that it's a totally different game.
Yeah. So what I found particularly interesting, looking a bit around, it's the level of ICO, the initial coin offer. I notice it's almost, I would say, taking over also some number of crowdfunding platform as well, becoming a way also to raise money for companies. So my question is, how do you see this phenomenon, and are you actually taking track of all these new alternative coins?
Yeah, this is crazy. It really began in March, which is 2 months ago. And we have a full semester course on blockchains and digital currency that began in the first week of February. And we know that it's a fast-changing area, but this is one thing where just a totally new topic had to be added toward the end of the course. But we are barely understanding this. And there's even a conference being held next week at NYU about these coins. And just out of nowhere, not only are these things taking off, but getting a bunch of industry people. It's called the Token Summit. And they're trying to get professors to speak at it. And none of us even know what these things are. What seems clear with these ICOs is that there are many parallels to things that we've seen in the stock markets in the past. That you get essentially panicked buying of a certain narrow class of assets. And you saw this, for instance, with dot-com technology stocks in the late 90s. And the people selling these tokens or coins are trying very hard not to have them regulated as securities. And so they all seem to stipulate that these are not securities and these will be used for very different things. And some of them have even put in mechanisms to guarantee that the price will fall after people buy them, and people still show up and buy them. It's hard to attribute this to much other than panicked mob animal spirits, and these things almost always end badly for the investors. And what I've noticed, and I've tried to convey to my students, is that the values being put on these things are a little bit illusory. That they will say that such and such raised $6 million, but almost always what they are raising is Ether tokens or other crypto assets. Almost none of these are being sold to the market for real money. Now, in theory, you could swap it into Bitcoin and then sell the Bitcoin and so forth, but a lot of these ICOs are really people trading crypto for crypto. And if you and I were playing Monopoly and we auctioned off a property with Monopoly money, that's really a little bit different than doing it for the real cash. And I don't know if there's enough liquidity in the market that if people tried to sell these ICOs, even if they did it by way of Bitcoin, would the real world really pay in real money for these things? I kind of doubt it.
So as we said before, indeed there is a lot of buzz around Bitcoin blockchain, and we all experience it. Actually, if you Google it, you find so many different sources. You actually don't know where to look at. Is there any specific sources that you would like to recommend people to be up to date in this really dynamic field and understand a bit more about blockchain and Bitcoin?
I'll tell you what I look at. I think there's particularly good coverage in the Financial Times and The Economist,
Right.
who follow the area closely and really apply the kinds of standards that they do to journalism and the rest of the financial world. There are some pretty good resources. There's a textbook published by Princeton University for an open online course that gets into a lot of the architecture and the details behind it. So for someone with some technical knowledge, I often direct them toward that. And you do see some pretty good research reports being put out by some of the investment banks who do have a little bit of invested interest in certain positions, but they tend to do a pretty good job of surveying the field. We had very good guest speakers from Deloitte, for instance, who came in and gave a survey of the overall marketplace and where you're seeing startup activity and where you're not. You have to do some legwork, and the real challenge to me is not finding information so much as keeping up with how quickly it's changing. You know, we mentioned a moment ago the ICOs. Nobody heard of these until 8 weeks ago. And so even if you had wanted to learn something about them in March, there was nothing out there. And, you know,
But
today...
it's the best part of the game, to be honest.
Yeah, no, I find this stuff addictive because there's so much creativity and innovation. People are looking at really old problems that, you know, from the beginning of human society, people have worried about how to pay each other and how to save and invest and give credit. And you see now in the last 10 years, more imagination being brought to these problems than at any time ever. And many of these ideas are not going to stick. You know, so there's a lot of crazy promoters in the area. But some of them really are. I think the financial system is going to be all but unrecognizable in 10 years. And for someone who's an academic who is sort of paid to study and observe this, it's really
It's
kind
amazing.
of a fun time. Yeah. I mean, I'm kind of toward the back end of my career. This is a young person's thing. But this has been great to kind of discover this new area and, you know, kind of hitch a ride on what has been a really interesting, exciting period in the financial markets. A lot of my colleagues still think I'm crazy, but they think this less and less every day. As this is now, you know, becoming more and more important. And I realized I was onto something when I started getting invited, like by the Federal Reserve and the BIS. When, you know, I realized that the very top people there are keenly interested in this. Yeah, and you know, it's being taken very seriously by regulators who see this as not just difficult for them, but a challenge to the structure of the whole system that nobody really saw coming. And this is kind of fun.
Yeah, definitely. At the end of the month, you will be in Amsterdam for a lecture about blockchain with the university, the UvA University. What's the most important lesson people should take home from your lecture, and why it's so relevant that financial institutions are really dive into blockchain?
I think many of the people who would attend these lectures would work in the financial industry in one way or another. And the most important lesson is that their jobs aren't going to exist in 10 years, that the technology really removes the need for a lot of the role of auditors and credit officers, many people that work in finance. But at the same time, it creates the need for new people with other skills, especially data scientists. And so I think knowing how jobs are going to evolve in somebody's industry is obviously important, and that this is something that I would be focusing a lot on in what I teach. The other thing is for the consumer, and really all of us are consumers in the financial world, you're looking at a future where you have much more personal responsibility, but much more opportunity. That things will be done on a peer-to-peer basis, and you'll see industries changing kind of the way Uber has changed the ride-sharing business, or Airbnb, the hotel business. And this creates opportunity that in the end, the consumer will have much more freedom to contract with who they want. They won't have to pay fees to middlemen like banks and credit card companies. And there's a potential for vast savings in the economy, really trillions of dollars that will make everybody better off who uses the financial system. you also have billions of people in the world that do not have bank accounts and are not connected. These are called the unbanked, and they don't play a role in the financial markets. But almost all of these people have mobile phones. And so there's a way for this technology to bring many more people into the financial markets and give them opportunities to participate into the economy that didn't exist up till now. I find that particularly exciting. And for many of the businesses that are out there, it's really a marketing opportunity. There's lots and lots of customers that you might reach with this technology, people in certain countries or younger people or people with marginal credit histories who nevertheless would value the access to your services. And I think that's particularly exciting about this is the opportunity for more financial inclusion, as we call it.